Hey everyone, welcome back to my channel. Today I want to talk about a common pattern we see occur after certain macroeconomic events such as PPI, PCE, and sometimes even CPI to a lesser extent. The smaller events, though, will oftentimes lead to a move in the pre-market, which creates a very one-sided move, which we know as a fair value gap. These days, then become very difficult for many traders, but I want to show you a simple formula that we can use to make this a very straightforward payday instead of a day that we struggle with. Before we get started, I'll leave several discount codes for trading services I use in the description, including TradeEdX, Voland, and Elite Trader Fund. Lastly, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. It really does help the channel grow, and it means a lot. With all that being said, let's get right into it. So I'm going to show here first on NQ the type of day I'm referring to. And so this is December 1st, 2022, followed by December 2nd, 2022. And you can see we have this massive sell-off in both these cases. And then, and this is actually, December 2nd is actually a very good example of this because this was a PCE data release at a massive sell-off. And then we proceed to fill the whole thing. And if we go to the example that I want to focus on for today's video, is the more recent one, which was the December 9th PPI sell-off, which same deal. I had this sell-off, and then we proceed to fill it. And if we go to the lower time frames, I want to talk about how I play these, and I don't want to use any indicators because I want to talk about drawing this stuff ourselves so we know what to look for in these cases. So the first thing I do, and I've talked about this many times, is that I always trade NQ and ES side by side. I actually keep YM up as well. However, in this case, just for screen space, we're going to have ES and NQ up side by side. And so we have this big event sell-off that occurs. Big red bar. This means sellers are in total control, and it's a very one-sided move, which constitutes a fair value gap. Now, when we have a fair value gap, we have one of two things that can happen. We can either just keep going and leave it behind. The fair value gap can actually become resistance, and then we can just move lower, or we can proceed to fill it. Now, there's several factors that can help us determine which way we're going to go, such as dealer positioning data, dark pool data, which I've talked about in recent videos. The thing that we're going to use here is just focus on the chart for a little bit. Let's pretend we didn't have that data. How could we determine that this is going to fill, and how could we play the fill? So the first thing we want to do is we want to mark where we will likely fill to. So I'm going to take these green candles prior to the move, and I'm going to mark this as the full order block. That's the way that I like to designate the order blocks. Some might say that just this one green candle will designate it. Because I'm trading on the 2-minute, I want to give it extra candles. And then I'm going to do the same thing for NQ, where we're going to mark our bearish order block here. And now if I'm looking for a fill, I'm only showing the pre-market range. I would do the replay, but the thing is I'm doing these side by side, and I can only replay one, so we're going to kind of have to do it in a hacky way and scroll here. But the first thing I want to talk about is this buy up. So let me just hide the volume. So when we came down, and we can see this on both sides, once we got to this point, which was actually 39.60, and this did actually correspond with dealer positioning data on SPX, and which was actually at the time 39.50, which was Vanna repellent. ES and SPX they're not identical. They are off a little bit for various reasons. And just know that this was 39.50 on SPX this day. We had a big buy up, and then we continue moving higher, and then we have a big rejection. Now we're still in the pre-market here. But then the first thing we do is, now if we had made new lows, I actually would have been looking for a trend continuation. But I wanted to see what happened here. I wanted to see if we were going to make higher lows or lower lows. And we can actually see we made a higher low. We come down despite all this selling still. And then we move up. And then we come down again and we have a higher low. Now at this point, to me, that's saying, okay, we're most likely going to fill. When we combine that with the Vanna data that I was seeing on Voland, I don't have a way to show you that right now, unfortunately. Recently started recording this data on Twitter and doing a breakdown, which will help me go back and historically show these things. But unfortunately, I only started doing that this past week, so I do not have that data to show you. However, when we start selling, so let me just turn volume back on because I do watch volume throughout the day. So we have our order block. So the assumption is on one of these two, NQ or ES, because they're strongly correlated, one of these are going to fill to that order block first. Whoever makes it to that top order block first, we're going to look for signs of stopping volume, price action showing that we've topped out, and then we're going to look for a move back lower. So in reality, if we trade this day perfectly, we're only really going to plan on taking two trades, the fair value gap fill, and then the rejection from the order block that created the fair value gap, and then back down. And it doesn't matter which one you trade, but it's very important to watch both, because one of them, and this is applied to even previous days, which if you go and check out, one of them tends to reach it first, and then they both reject because they're so tightly correlated with so many of the same holdings. Now, in this case, I was actually playing NQ, and I want to talk about where I got in. I actually did wait for market open. Now, what would have been the reason I wanted to is because we can see we have these wicks, and normally I would try to limit here, but my concern was we're going to market open and just dump. So I wanted to see what happened at the market open, which is, we can see here is shown by the volume spike, of course. So we have these big volume spikes showing that, okay, the New York session has now opened, and we do get these wicks over here on NQ, and we get an immediate buy up. So to me, that's further confirmation that we're going to go higher and fill this gap. So the first thing I want to do is try to look for a good entry point here. So let me just zoom in a bit. And so again, I am watching ES on this, but I'm trading NQ. So we have this buy up, and then we have another buy up. Now these days are usually incredibly choppy as well, and that's actually what gets a lot of traders killed, is the choppiness, and they just don't, and a lot of times we don't have the conviction that this thing is going to fill. A lot of times you might not even realize that's going to be the case, but it does play out more often than not. Now, if this, as I said, if this bottom had fallen out, even once we open, so once we get to the open, if this bottom started falling out and we started making new lows and lower lows and lower highs, I would have been looking to play a trend continuation. That did not happen. So now I'm trying to figure out an optimal entry point for going along to play this fair value gap. I prefer playing NQ oftentimes. It respects smart money concepts really well. Also, it tends to pay more, but it's also a bit riskier. So it's a personal choice. But anyway, so what I was looking for is when we get this next buy up, I set my limit order within these wicks. So I want to try to get a precise entry, and the reason I'm doing that, you could just mark it in, but I am trading on a funded account, so I want to be wary of drawdown and things like that. It's just sort of a habit I picked up. It's not really the case anymore because my drawdown is static now that I'm funded and all that, but despite that, still a habit I pick up where I want to try to get optimal entries. And as this plays out, it looks like it might leave without us, but you can see, because these are very choppy days usually while we're looking for these gap fills. So, and let me just zoom out on ES so we get a better overall picture of where we're at. So we can see in this wick, limit order gets triggered in, I get bought in, and we get confirmation of a move higher. So at this point, I'm doing everything I can to stay in. Now, I do take multiple positions. I'm at a point now where I'm taking anywhere from 3 to 5 NQs at a time, up to 13. Now, that being said, on choppy days like this, I tend to stick to smaller position sizes, but we're broadening off the wicks because we're doing limit orders off the wicks where we have buy-ups for this fill. And what ends up happening is we can scale out at certain points. We can trail it, but we need to be super careful not to trail it too tight. So whenever we have these pivot lowers, move higher, pivot low, move higher, you want to make sure you give it space under these wicks. Whether you're trading ES or NQ, you just need to make sure you give it some space because you don't want to get moved out of your position until one of the order blocks are reached. And so we get up here, and you can see we get to this order block, and we take an immediate rejection. Now, if you are an aggressive trader, you can try to play that rejection. But for me, I want that confirmation that we are indeed going to reject. Also, I just want to see, okay, is there a chance that ES is going to get to an order block and NQ might go a little bit higher, because that's certainly a possibility. But and that being said, I do exit the bulk of my position here and just really leave one runner. Now here's where it gets interesting. So this continues to play out, and when I click one side, it skews the other side. So this continues to play out, and we just refuse to go higher. And you can see on ES, we're stalled out as well. It's actually correlating to the NQ order block here from the fair value gap fill. So this is confirmation that we will indeed go lower. Now, that being said, I still didn't take shorts here. I just wanted additional confirmation to be 100% sure. And so when we actually started moving lower, we get this sell-off. Now at this point, okay, the order block rejection happened. Again, I'm not going to chase into it. Choppy day, choppy price action. I'm going to play limit orders only and try to get the best possible entries I can, because I do not like sitting through drawdown. Just the way that I trade. So we actually get that. When we get this consolidation here, this is where I set my limit orders within these wicks and candle bodies around 11,780. And we're able to get brought in, and we actually makes it look like if you were chasing this, if you weren't doing limit orders, makes it look like you're gonna get a leg lower, and you don't. We come back up, we continue to consolidate, and then finally we get our dump, and then we know that the target is going to be back where we started, just by the nature of how these fair value gap fills play out. Hit the order block and then reject harder. And sure enough, we ended up going below that, but that I ended up closing my position at the end of the day. And that is how you play these new sell-off days. And it happens like this more often than not, where we have the fair value gap fill with the continued rejection, and just being confident in that, knowing how to play, being patient, placing limit orders despite the choppy price action, not allowing yourself to get lost in the choppy price action. Sometimes if you don't like the lower time frames, you can actually set it to a higher time frame, which will help it look a little better for you. Now, that being said, it might make catching the wick entries a little bit more difficult off limit orders, but the big thing is we don't want to chase. We want to watch them both side by side, and we want to play whichever side basically wins the race. And me personally, I don't choose to just immediately short, even though we did have a lot of confirmation here looking back, but just being on the safe side, I wanted to make sure that we actually did start distributing here, and then we consolidate again, and then we distribute again. So that is how to play these days. And I promise you, if you look for these fair value gap days and make the decision early on, okay, I'm going to play the fill versus the trend, and you play it patiently, and you limit in, and then you look for the move in the opposite direction once the order block is touched, you will have turned these into incredible days, which I know for a lot of traders, and it used to be like this for myself, it can be really messy days where I would beat up my account, but now they're actually some of my favorite days. And thankfully, because of the amount of news we've been getting and the volatility of the markets, these have been happening quite a bit. So pair that with dealer data and everything else, and you really have a winning strategy here. So I hope you found that useful, and if you have any questions, please let me know. Thanks for watching.